Welcome back to Investing Talk podcast. Today, we're sharpening our focus, really zeroing in on an intriguing company in the tech space, Okta. We're going to unpack what you need to know about their upcoming earnings report. We'll be digging into the critical numbers and also the market sentiment, how people are feeling, which could really impact its future. Our goal today is, well, pretty simple, give you a clear picture of what's at stake with Okta's upcoming earnings. We want to cut through some of the noise, highlight the most important insights from recent analysis. Hopefully, you'll walk away with a richer understanding of what to watch for, and maybe more importantly, why it matters. And hey, before we really jump in, if you find value in these insights, please think about subscribing, maybe liking the video, leaving a comment. It really does help us out. And if you want to support us even more, you can always buy us a coffee. The link's usually somewhere down below. Also, if there's a specific company you'd like us to look into for a future analysis like this one, be sure to leave a comment below after we're done here. We do read those. All right, let's set the stage then. Okta is set to release its earnings report after the market closes on August 26, 2025. These earnings days, they're always high-stakes moments, aren't they? And for Okta, all eyes will be on a few key figures. What are analysts actually expecting? What's the consensus out there?
Yeah, it's interesting. Analysts are generally looking for revenue around $688 million. Now, to give that some context, that's actually the same as the prior quarter's result, and it represents roughly 11% year-over-year growth they're anticipating. For earnings per share, the number to watch is the Zacks consensus estimate, which sits at $0.84. What's kind of fascinating here is that, historically Okta sometimes had these whisper numbers floating around, usually a bit higher than consensus. But for this specific quarter, there isn't really a reliable whisper number published. So we're mostly going off that official consensus.
Huh, no whisper number this time. Okay, so what did Okta itself tell us to expect? What was management's guidance going into this?
Right, so management had previously guided for revenue in a range between $680 million and $688 million. And their EPS guidance was $77.86 for the quarter we're talking about. But crucially, they also signaled, looking ahead, continued double-digit revenue growth and expanding operating margins for the next few quarters. That's something investors will definitely be listening for confirmation on, maybe even an upward revision. It sets the baseline expectation.
Okay, history often gives us clues, right? About how a company performs and how the market reacts. So let's look back a bit. Okta's past earnings performance, say the last 4 quarters. What stands out to you? Anything consistent?
Oh, definitely. A very strong pattern is consistently beating analyst EPS expectations. That's been pretty reliable. Most recently, for example, they reported $0.86 EPS when the consensus was $0.77. That's an 11.7% surprise. Pretty good. If you zoom out a bit, their trailing 12-month EPS growth is, well, really strong. Like for the quarter ending April 2025, they hit $0.36 EPS. That was a massive 250% jump year over year and annually. Their EPS for 2024 was positive $0.16. A huge turnaround from negative $2.17 in 2023. Shows that shift to profitability is real.
That sounds fantastic on paper, beating estimates, turning profitable, but, the stock market has a mind of its own. How does the stock itself tend to react to these beats? Do those positive numbers actually lead to sustained gains for investors, or is it more complicated?
Yeah, that's the million-dollar question, isn't it? It's actually quite complicated with Okta. The stock has typically seen some pretty volatile price action right after earnings, even when the news is good. We've often seen cases where a beat leads to a nice gap up when the market opens, right? But then boom, profit-taking kicks in. And those gains can just evaporate within days. It's almost like a sell the news event sometimes. And if the beat is more modest, just kind of meeting expectations, the upside has often been pretty muted. It seems investors quickly shift focus to the future guidance, weighing that more heavily than the quarter just reported. So yeah, strong results haven't always meant easy gains. It's been choppy.
Right, that makes sense. The market's always looking forward. So beyond the stock price swings, what about the actual business, the operational metrics? Have those been trending well? Things like customer growth or margins?
Operationally, yeah, the picture looks pretty solid. User and client growth has kept moving upwards. That's fundamental, right? Shows the business is still expanding its reach. Also, their gross margin, that stayed consistently above 70%, which is, a healthy number for a software as a service company. And importantly, their operating margins have been improving steadily. That reflects better scale, more efficiency as they grow, reduced losses turning into profits. So yeah, operationally, these are definitely positive signs. The underlying business seems to be getting stronger.
Okay, let's broaden the view a bit then. Context is key. Were there any significant news items or company developments during this past quarter? Big product launches, M&A, anything like that, which might sway things?
This past quarter was actually kind of quiet on the major headline front. No massive new product unveilings or big acquisitions announced, things that might have been major catalysts in the past. However, the company updates did mention continued expansion within large enterprise accounts. That's important. It means they're landing bigger fish or selling more to the big clients they already have. That's usually stickier revenue.
Mm.
And they also highlighted progress with their off-viewer developer platform. That's key for getting developers on board, embedding Okta early on. So maybe not splashy news, but incremental progress in core areas.
Got it. Incremental but important. And how does the bigger picture fit in the whole sector, identity and access management, and the macro economy?
Well, identity and access management, Okta's core business, it remains a really high priority spending area for companies. You just can't ignore security these days. It's largely driven by, well, the constant threat of cybersecurity breaches. It's almost become like digital plumbing, essential infrastructure. Software spending generally has held up okay, which helps. But, and this is a key but, there's definitely still noticeable scrutiny on overall IT budgets. Ongoing macroeconomic uncertainty, sensitivity to interest rates, companies are watching their wallets, even for critical stuff. So Okta still needs to prove its value.
That's a really good point about budget scrutiny. So, given that backdrop, what have analysts been saying recently after the last earnings, heading into this one? What's the vibe from the street?
After that last earnings beat, we did see some analysts nudge their price targets a bit higher. That's usually a positive sign. A few even upgraded the stock to a buy rating. They often cited the improving profitability as a key reason. However, it wasn't all rosy. One major brokerage specifically flagged the valuation as, quote, challenging, given the current growth rates.
Challenging. That's analyst speak for expensive.
Pretty much, yeah. It suggests that even though the company is doing well, the stock price might already reflect a lot of future optimism. But even that brokerage expressed confidence in Okta's execution, their ability to deliver, and their customer retention trends. People stick around. So it's kind of a mixed view, but leaning optimistic, just with a careful eye on that valuation multiple.
Okay, now for the really interesting part for market watchers, the signals from the market itself. How has the stock been behaving leading up to earnings? And what are the options markets telling us? Are traders betting one way or the other?
Leading up to the report, the stock has shown a bit of a modest upward drift, just kind of inching higher. That usually suggests, a moderately bullish sentiment among traders, some quiet accumulation maybe.
Oh,
As for options activity, it's definitely elevated. That's normal before earnings, high anticipation. We're seeing a mix, a balance really, of speculative calls betting on a rise and puts betting on a fall. But if you look at the open interest, the number of outstanding contracts, it slightly favors calls. So that suggests options traders are leaning maybe just slightly more bullish heading into the actual event.
okay, slightly bullish lean. And what kind of move are they actually pricing in? How much volatility does the options market expect?
Right, the implied volatility. The options market is currently pricing in a move of roughly plus or minus 8 to 10% for the week of earnings. And that level, that 8–10%, it actually lines up pretty well with the kind of volatility we've seen in recent quarters around Okta's earnings. So it's consistent. The market expects another significant swing, maybe around that 9% mark, could be up or down, but maybe with that slight upward bias from the call activity we mentioned.
Okay, 8–10% expected move. So thinking about outcomes, what would a really strong bullish result look like? The kind of beat and raise scenario that gets the market excited.
Yeah, the dream scenario for bulls. That would probably involve revenue coming in significantly above expectations, let's say over $695 million. And EPS would need to top maybe 0.90 cents, considerably higher than consensus. But crucially, it's not just beating the past quarter, it's the raise part. Guidance would need to signal accelerating revenue growth and further margin expansion ahead. And for extra kicker, significant acceleration in adding new customers, especially large ones, or a big jump in expansion ARR. That's the annual recurring revenue from existing customers spending more. That really shows leverage.
Right, beat and raise. So conversely, what spells trouble? What's the bearish scenario look like? What would likely trigger a sell-off?
A miss, basically. Revenue falling short, maybe below that $680 million lower end of their own previous guidance. EPS maybe closer to 75 or even lower. And really importantly, soft forward guidance. If they signal slowing growth or margin pressure ahead, that's usually bad news. It would be particularly concerning if they report a slowdown in winning new large customers, or if those operating margins actually compress instead of expanding. And of course, the ever-present risk for them. Any mention of a new security incident, which has hurt them before, or rising customer churn, or just a clear slowing in subscription growth, any of those could definitely push the stock down sharply.
So many things to watch. If you had to pick just one, though, if someone's watching this closely, what single metric should they prioritize above all else? What's the most critical number?
That's tough, but if I had to pick one, I think the absolute key metric to watch will be Okta's forward revenue and billings guidance. Billings especially gives you a sense of future contracted revenue. These figures are really the best leading indicators we have for their future growth path. They're what truly drive investor confidence, or lack thereof, in the longer run, and whether that premium valuation holds up. It's all about the future.
Makes sense. Guidance is king. Okay, pulling it all together then. Given everything we've discussed, the history, the context, the signals, what's the overall sentiment for Okta as we head into these earnings? If you had to put a confidence score on it.
Overall leaning. I'd say neutral to moderately bullish. That's mostly because of their recent track record, the strong execution, those consistent beats, and the generally positive analyst comments, despite the valuation concerns. But that optimism is definitely balanced by the high valuation itself and those broader sector headwinds, the IT budget stuff we talked about. So on a confidence score, maybe 1 to 10, I'd probably place it around a 6. The recent performance suggests upside potential. But the macro picture and that demanding valuation keep conviction somewhat in check. They really need to deliver.
A 6 out of 10. Okay. So for our listeners thinking about potential moves around this event, what are some strategic things to consider depending on how much risk they're comfortable with?
Right, it depends on your risk appetite. For more risk-averse investors, it might just be smartest to wait until after the earnings report, let the dust settle, avoid that initial volatility spike. Or they could look at defined risk option strategies, maybe like a call spread if they're cautiously optimistic, or a put spread if they want some downside protection. These cap your potential loss. Now, for more risk-tolerant traders, the ones who like the action, an at-the-money straddle or strangle that's betting on a big move, either way could pay off nicely if the stock moves more than that 8–10% the market's pricing in. If they're specifically bullish, maybe a call spread above the current price, that could offer a potentially better risk reward than just buying expensive outright calls given the high volatility.
And what about the long-term holders, people who believe in the company's story beyond just this quarter?
For long-term holders, yes, the fundamentals we discussed, like improving margins and customer growth, are positive. The core business seems to be strengthening. However, we've established the earnings reactions are often quite choppy, quite unpredictable in the short term. So maybe scaling into the position after earnings makes sense, especially if there's a pullback. Using weakness as an opportunity to add shares at a potentially better entry point, it could help reduce the risk of bad timing around the earnings event itself.
Okay, so wrapping this up, what does all this mean for you, the investor, keeping an eye on Okta? We've looked at their upcoming earnings from, well, a lot of different angles. Past performance, the market context, potential scenarios. It seems pretty clear that while there's a strong operational story taking shape those beats, the margin improvement, the market's reaction is really going to hinge on that future guidance, and specifically how that guidance stacks up against the stock's premium valuation, especially with companies watching their spending.
Exactly. Hopefully the insights we've gone through today empower you to look beyond just the headline numbers, to really analyze the nuances here. And it raises, I think, an important question, maybe a final thought to leave you with. In a world where pretty much every company is becoming a software company, and cybersecurity is absolutely critical, how much of a premium will investors continue to place on these specialized identity and access management solutions like Okta provides? Especially if IT budgets do face sustained pressure. That's something to really ponder as you watch Okta's report unfold and see how the market digests it all.
A very pertinent question indeed. Thank you for joining us for this look into the world of investing and Okta's upcoming report. We hope you feel better informed, maybe a bit more prepared for what's coming next. We'll be back soon with another topic to help your financial understanding. Until then, keep learning, stay curious, and thanks for listening.